What's up, YouTube? Welcome to the Boeckle Bros Channel, where we talk all things real estate. I'm Jesse.
And I'm Landon. And on today's episode, we're going to talk about how to purchase your first flip using private money versus hard money. So the first thing we hear when we talk to a beginner trying to invest and flip in real estate is, I just can't afford to flip. I don't have enough money. I don't have tens of thousands of dollars to put forth on this investment property.
The money issue is probably most people's biggest concern, biggest worry, and biggest question mark of how I'm actually going to get into this business.
You know, in reality, that's a mindset issue.
Definitely.
It's not the truth. You know, let's debunk the myth of having to have a lot of money to start investing. You don't need it, and we started with very little to nothing.
Exactly. We started out, we're living proof of starting out with no money in your bank account to actually go fork it over to buy a house yourself.
Right. You know, the truth is, you don't need tens of thousands of dollars to start flipping homes. You also don't need, a huge backing of experience or a huge track record of flipping homes either to get started.
Right.
Really, all you need is to study the market, know what you're talking about, be a trustworthy person that someone else feels comfortable loaning money.
Someone else that will believe in. So basically, take your time, build out a little business plan for yourself of what you're going to do, how you're going to do it, and how it's going to make sense for you and everyone involved. We started flipping homes back in, was it 2016?
It's 2016.
That's when we officially started our company. We joined forces and decided to go after it and flip homes.
The Boeckle Group was born.
It was born. But we started with no money. And we want to let everyone know that not to worry about that aspect of the business. You don't have to start out with money.
Right. And we didn't start out with some amazing real estate track record either. We didn't sell hundreds of thousands or millions of dollars worth of homes prior to saying we're ready to flip our first property.
All we did was put our heads together, we decided to make a plan, and then we decided to go out there and find private money that would partner with us and help us do our first few deals.
Right. We studied our market. We studied and we prepared before actually taking that dive into the flipping business.
Right. You want to be prepared and be able to pitch to someone and have them feel very confident in you and your abilities to be successful.
Right. And when we felt prepared and we felt ready to go, we finally went after our first financing source, which happened to be a private money loan.
Right.
So what is a private money loan?
Great question.
A private money loan is a loan given to an individual from a private organization.
Right. Or a private individual. Could be a single person.
Right. And in this case, we went after private money from a family member. We had a family member that wanted to invest in real estate. They had some cash set aside and they wanted to invest in real estate, but they didn't know where to start and they didn't want to put all the hard legwork in to finding that first deal for themselves.
Right. That's actually a great avenue on how to approach people just like that may have the capital but not have the time, energy, or the drive to go out there and make it happen. And that's where you come in.
Right. So for all intents and purposes today, we're going to talk about a private money loan coming from a family, friend, or an acquaintance that you may know today in order to start flipping and obtaining the deals.
Right. You'd be surprised that your sphere of influence, meaning, again, those family, friends, or acquaintances, on who you could meet in that circle and who might be willing to partner up with you and lend you money.
So a private money loan can be structured in many different creative ways. This is not an institutional organization per se. This is a family friend talking one-on-one saying, I have a little bit of money put aside to invest. And you're coming to the table saying, I have properties, I've studied, and I am prepared to buy our first property.
You're prepared to do that legwork.
Right.
So that's a good point, is since it is a private money loan, you could structure it in many different ways that maybe other larger corporations or larger institutions can't do. So you can really make it work for you and that other individual specifically.
Right. And the way we started out was a model called the equity split model, meaning that at the end of the day, there is an equity split from the net proceeds of a transaction that went to either side.
Right. So in our model, that private money lender puts up all the funds to purchase, puts up all the funds to rehab the property. We put all the sweat equity in with time, effort, and management. And at the end of the day, we split the profits.
Right, and that profit split could look like 60-40. 60 going to you, the person who puts in all the work, and 40% going back to the person who financed the deals. What's the benefit of this, you might ask? The benefit is you could start investing today with zero to no money out of pocket. That's a huge benefit. We flipped almost 150 plus properties using the private money equity split model.
Just to quickly summarize before we move on the private money model, we just want to go over the three main benefits to using this type of funding.
Right, so benefit number one is you could start investing today with the equity split model with zero to no money out of pocket.
Right, so no startup costs. You only need to meet the right person, and you can get started today with no money out of your pocket. Two would be, since it is a private money lender, a private person, and you have the ability to create something very individual to your relationship, basically a contract that works for both sides.
The terms and the splits are very negotiable.
Right.
I think it could be 70-30, 60-40, 50-50. Whatever it is, it's creative negotiations and fair negotiations between either sides.
Exactly.
The biggest con of the equity split model is you're giving up a high dollar amount of net proceeds or a high percentage of net proceeds on each deal.
Yes, the ability to start with none of your own money means you're going to be giving a lot away at the end.
So now jumping into hard money. Hard money is a whole different ballgame, and we just started using hard money about 25 flips ago.
Yes, and the structure of hard money looks a little bit different, so let's break that down.
Hard money is a loan based on collateral against the loan. So collateral in this point is going to be the actual subject property that we're dealing with.
Property itself, right.
So the hard money lender is going to own that property and have a lien against that property, a first priority lien against the property, meaning that it's collateralized.
And what that basically means is, in layman's terms, is that they have an interest in the property up to a dollar amount, usually the dollar that they're lending you, so that in the event of a sale, they get paid their money back.
Right.
The rest of the hard money structure is fairly simple.
So the difference between a private money loan in the equity split model and a hard money loan up front is it's going to require a down payment. You're going to have to come out of pocket a certain amount of money in order to purchase the deal.
So an example of a hard money structure, that one that we're actually using today, is as follows. Our lender will loan up to 90% of the actual purchase price of the property.
Right, 90% LTV, loan to value.
Right.
So if the property, let's use a clean number, is $100,000, the hard money lender will loan you $90,000, which means you come out of pocket $10,000.
Which is your down payment. So your down payment in order to do this is only $10,000.
And then you're going to go into some fees. So most hard money lenders are going to charge some sort of origination fee or origination points. In our case, they charge one origination point, which at a $90,000 loan is going to be $900.
Right, so on top of your $10,000 down payment, you have your $900 origination fee, and then a lot of other hard money lenders will charge some sort of fee just for processing and initiating the loan, which could range from $500, $1,000, $1,500. In this example, ours is $1,000.
Right. So far you're on this $100,000 purchase, you're out of pocket personally $11,900.
Right.
Now, there's an interest also on the money.
An interest payment that needs to be made.
Right. The hard money lender is going to charge an interest percentage or an interest amount for all of the money that they loan you. In our case, the interest rate's 8.75%.
Right.
So they're gonna ask for 8.75% not only on the $90,000, but also on the money that they loan you for the remodel costs as well.
Everything that they've loaned added together, they take that times your interest rate, and that's what you're going to pay them on a monthly basis.
On a monthly basis, that's the key. So you need to have some reserves in your account because you're going to be coughing up checks on a monthly basis in order to cover those interest payments.
So what you can already assume now that we've gone through the structure of the hard money loan is this requires money out of pocket.
Right.
Although you don't have to come up with all of the funds to buy the house, it's much less than that. It still requires you to have some capital to invest this way.
Right, you're looking at having $10,000 to $20,000 out of pocket on this house up front, and you got to be willing to take that risk and spend that cash.
Right.
pro to the whole hard money side is the net proceeds are a lot higher than on the private money side.
So what that means is at the end of the day and the end of the project, instead of like the private money splitting the profits with your partner, you actually take home all the profits yourself.
Right. After paying them back their loan amount and their interest fees, all profits go to you.
Right.
These profits tend to be a lot higher than the equity split model. So a decision that you're going to have to make is upfront. Do you have the cash to invest in a hard money lender? Do you want to take the risk of coming out of pocket to invest in the hard money lender? Remember, high risk equals higher reward, right?
Absolutely.
Or can you find a family friend to loan you some money, or who is really willing and able to invest in real estate with you to put some money up front? You come out of pocket, zero to low money, and at the end of the day, you have a very fair negotiable equity split. Without private money, we would never be where we're at today.
No.
We would never have been able to flip the amount of homes and the high volume of homes that we started flipping back in 2016.
No. It wouldn't allow us to put all of those past projects behind us and gain that experience and then arrive to where we are today, scaling our business up in the first quarter of 2021.
Right. That's what the hard money loans has given us the ability to do. Using the hard money now and putting the money out on each project, but higher proceeds back, it's really given us the ability to scale our business and hit a much higher revenue. Have you guys looked into, do you have family friends? If you do, we're more than happy to help negotiate the terms with you.
Sure, yeah. If you have any questions about hard money, please drop a comment below and we're happy to help answer those questions for you. Or if you've used hard money or private money, let us know how that experience has been. We'd love to share that with our viewer base.
Right. If you're talking with family, friends, or acquaintances about possibly jumping into the real estate investment game and you need help with the negotiations or the terms of that deal, we're happy to help. We're happy to be transparent and show you our terms to make sure that you know what you're doing.
Right. If you guys have found this video valuable, we would really love it if you just hit that subscribe button for us.
If you have any other questions or concerns, comment below. We're happy to answer.
And otherwise,
see you on the flip side.